Welcome back to the Investing Iguana. In Singapore, securing steady dividend income can feel like discovering an extra stash of Kopi money at the end of each month. It's simple in theory, but finding the right SGX dividend stock before its ex-dividend date is like hunting for that one perfect hawker stall. Plenty of choices, but only a few make your taste buds happy and your wallet steady. Today, let's take iFAST Corporation Limited, ticker AIY.SI, and see if it deserves a spot in your portfolio. Its ex-dividend date is just around the corner on August 6th, 2025. Is it a dividend play you'll want to snap up, or should you walk past without a second glance? I'm going to walk you through my 7-step dividend investor playbook, my personal checklist for every Singaporean who wants their next investment to pay real, sustainable income. If you're new here, I'm Iggy, your friendly iguana. I've spent years breaking down the most important trends in Singapore stocks, CPF, and how to make your money work for you. This channel just crossed 1 million reads, nearly 60,000 likes, and over 900 videos. With 500,000 watch hours under our belt, you know this community cares about financial progress. If you want to be part of the movement, if you want to turn information into action for your wealth, this checklist could change the way you invest. Let's dive in with the first step. The basics. iFAST Corporation is a digital wealth and banking platform serving both retail and institutional clients. With its ex-dividend date confirmed for August 6th, if you want to capture the next payout, you need to buy before this date. This is fundamental. Miss the date, miss the payout. Next, let's talk dividend yield, the magic number most investors chase. iFAST projected yield for 2025 is hovering just under 1%. About 0.93% on the trailing 12 months. Historically, its yield is much higher, averaging about 0.8% over the last 5 years, but still low compared to the Singapore market average. Now, the sweet spot for a Singapore investor is a yield somewhere between 3 to 7%. If you are building HKD, SGD, CPF, or SRS income streams for retirement, you might feel iFAST's yield is less Kopi, more mineral water. Sometimes a low yield means the company is prioritizing growth or has a strong share price. Sometimes it means returns are not being maximized for investors. Here's the tension. Higher yields often come with higher risk, while low yields might signal a premium business with growth plans. Where does iFAST fit? While its yield won't impress income chasers, its above-market growth could make it attractive for long-term accumulators. Now, let's check dividend sustainability. First, that payout ratio. It's currently about 27%, meaning iFAST only pays out a quarter of its earnings as dividends. This is well below my ideal range of 35 to 55%. It signals caution from management. They're saving cash for growth, rainy days, or investment. Second, the dividend coverage ratio. With a coverage of about 3.7 times, iFAST can pay its dividends nearly 4 times over using just its profits. That's a great buffer and more than meets our 2 times target. Third, take a look at consistency. iFAST dividend history is rock solid. Since being listed in 2014, they've paid out every year and have even raised their dividends in most years. In fact, management expects to deliver their highest annual dividend ever in 2025, targeting a total of 8 cents per share, a 35% jump from last year. In this market, that's impressive commitment. After sustainability, let's move to free cash flow and financial health. Over the last year, iFAST's net profit shot up 38%. Cash flow has surged as their wealth management, banking, and especially their Hong Kong e-pension unit continue to ramp up. Free cash flow more than covers dividends, with a coverage ratio over 10 times. That's like having so much extra Kopi money left after bills, you can easily treat yourself and your family year after year. Debt is also under control. iFAST's debt-to-equity ratio sits at roughly 34%, comfortably below the levels that should worry dividend investors. The sector average can sometimes go as high as 50% or more, so iFAST looks financially sturdy. For CPF or SRS-linked investors who hate surprises, iFAST's balance sheet is the kind you want to see. But here's what really sets iFAST apart: earnings quality and business moat. While other platforms struggle when markets are soft, iFAST keeps growing. Its revenue for the first half of 2025 hit almost $227 million, and net profit for the second quarter alone surged 38% to reach $22 million. The company benefits from solid recurring fee income, high customer retention, and its growing digital bank is gaining traction in both deposits and new customer accounts. A robust pension business is also setting up for big future contributions. These all point to reliable earnings, even in a choppy market. The business mode is clear: iFAST network effect, strong tech platform, and regulatory licenses make it hard for new players to steal market share. Before we get carried away, let's talk about risk and red flags. With a yield below 1%, iFAST is not a classic yield trap. Its payout ratio remains low, so it's very unlikely to have to cut dividends unless profits collapse. Industry risk is always real, though. If digital wealth management or the Hong Kong business slows suddenly, earnings could take a hit. There's also regulatory risk, as Singapore and Hong Kong can both tighten rule books on short notice. Still, management's ability to pivot and their focus on scalable digital infrastructure make iFAST resilient. And Singapore's fintech sector in the second half of 2025 is still in growth mode, with government and industry bullish on digital wealth. If you want to see all the metrics, including charts of payouts, free cash flow, and more, remember to visit the Investing Iguana Substack. There's a downloadable checklist and my full analysis there. The link is waiting in the description below. Let's tally it up. My 7-step playbook gives iFAST a score of 7.5 out of 10 as a dividend play. The company's strengths are clear: a growing track record, aggressive dividend growth for 2025, plenty of cash to cover payments, and a strong market position. The main weakness: the yield is below what most Singapore income seekers might want, at least today. My verdict is simple. For long-term investors who want a combination of stability and upside, especially those using CPF and SRS who care more about safety and compounding, iFAST is a solid hold or buy. If you need maximum income every year and aren't interested in a long-term digital growth story, you might want to look elsewhere. But if you want a company that's trying to grow its dividend while building a wider moat, iFAST satisfies. Before we close, let's recap. Picking dividend stocks isn't as simple as looking at the headline yield or listening to the latest Copy talk. You need to follow a checklist. Check the ex-dividend date, compare the current yield with your targets, demand both coverage and consistency, and scrutinize cash flow, debt, business quality, and red flags. That's what separates the smart investor from the hopeful. If you learned something new, let me know in the comments. Like this video, share it with friends, and hit subscribe so you never miss another insight from the Investing Iguana. For those who really want the early scoop, join as a premium member. You'll get exclusive early access to all our videos, often a full week before anyone else. That's urgent market updates, fast-moving opportunities, and in-depth reports sent straight to your inbox before the crowd. All for just $1 a month, less than a Copy at your favorite hawker stall. If you're ready to be the first mover and get the most out of your financial journey, tap the link and become a premium member now. Before you go, check out our last deep dive on Singapore dividend taxation. It breaks down how to keep every cent you're owed from your payouts. It's a must-watch for anyone building a passive income stream in Singapore. Thanks for watching. Stay wise and stay invested. This is Iggy, the Investing Iguana, signing off. Your wealth, your future, your rules.